Hi guys, welcome back to the channel. Today we're going to talk about another option for investing in S&P 500. We're going to talk about a different ETF. Everybody thinks of the S&P 500 index. They think of VOO, right? The Vanguard S&P 500 index ETF. Well, there was one before that. The SPDR S&P 500 ETF. SPDR actually stands for Standard & Poor's Depository Receipts. This is the oldest ETF there is. It was started in January of 1993, and it is actually the largest ETF there is. Now, when this fund first started, it was novel. Just like John Bogle with his S&P 500 Index Mutual Fund in the 70s, it revolutionized the investing world. Well, the one drawback to an index fund or a mutual fund is it only trades once a day at the end of the day. With an ETF, because it's bought and sold on the exchange, you can buy and sell it during the day. So let me give you an example. The market starts going down early in the morning and your price goes from $50 a share down to $40 a share. You want to buy some on sale, so you hit buy. Now, if it's an index fund, it doesn't go through till the end of the day. What if during the afternoon that price went back up to 50? You're going to buy it at whatever it is at the end of the day. With an ETF, you could buy it at 10 o'clock in the morning at $40 and it would lock that price in. But let's talk about SPY. Ticker SPY. That's the SPDR S&P 500 ETF. It's owned by State Street Global Advisors, and they have the whole SPDR series, you guys. All of these are different ETFs involving the S&P 500. Now, SPY was the original S&P 500 ETF, and as I said, it is the biggest one to date. SPY has a total assets under management of $262.5 billion, you guys. The largest ETF on the exchange. Now, you know me, we always talk about fees here, keeping your fees low. Now, the expense ratio for SPY is 0.0945%. So, what does that mean exactly? Just under 10, about 9.5 basis points. So, think of it this way. So, on $10,000, you're going to spend about $9.45 per $10,000 you have per year. So, not the lowest expense ratio by any means, but still lower than some of the others. Remember, there's some others out there that are like 0.35%. So instead of paying $9.45 on $10,000, you would be paying $35 on $10,000. Big difference when you add up that over time and that compounding that's erased. Now, if we look at the breakdown, the nice thing about this is it covers all sectors. All 11 sectors of the market are covered in this fund. Biggest one obviously being information technology, followed by healthcare, and our smallest pie is materials and real estate. Now remember, this is a ETF that is based on market capitalization. So what that means is the bigger the company, the bigger the percentage of that portfolio. Now, obviously, because it tracks the S&P 500, there's 500 companies in the S&P. SPY actually has a total of 505 separate companies in this fund. So, companies do go in and out of the S&P 500, and as they do, you get a little bit of turnover. They also have a couple extras in there so that you're always covered. Currently, SPY is trading at about $300 a share. So as far as it goes, the share price is kind of expensive for a ETF. But if you use any of the platforms, for example, M1, now you can do it with Fidelity. Some of the other platforms out there are allowing you to buy fractional shares. And with the fractional shares, you could say put in $50 a week into SPY. Not all platforms allow that, and if that's not the case, then you would have to buy it at the share price at that time. But it's still a good low-cost way to get involved in the S&P 500, to get into investing. The major advantage to this fund, you guys, is its size. Remember, with an ETF, if you have a small ETF, every time that you sell a share, there has to be somebody to buy that share. And in some of the smaller funds, sometimes the liquidity is a little bit less. This is the largest ETF there is. So if you decide that you need to sell for whatever reason, you should have no trouble finding a buyer to buy it at that price. Investing in the S&P 500, always a good thing. You're investing in the 500 largest companies in the United States. Companies with long track records and good business health. All right, you guys, hope you got something out of this. If you did, drop a like. Really helps the algorithm. If you're not already subscribed, hit that button, ring the bell. You get notified every time I make a video. All right, we'll see you again. Bye.